let's go ahead and get started. It is 11 a.m. on Tuesday. So I'm here talking multifamily. Hopefully we are live on Facebook. And yes, we are. What's going on, Rashad, my man? Chad Green, what's going on? Welcome back, sir.
Thank you.
We got Troy here, Ash, John, oh my God, like John, you should be teaching this topic for today.
No way, man.
What's going on, man? Glad to have you here. Let's see, Tiffany. All right, awesome. I'm glad that you're hanging around, and Tiffany, we got to get a follow-up. We got people who could actually teach this stuff here today. So let's go ahead and hop into it. We got a lot to cover in just a little bit of time, so I don't want to waste any of your precious time. Let's go ahead and sort of hop right in. One of the scariest things when it comes to buying apartments is the raising capital piece, right? The greatest fear any syndicator, any multifamily operator has is, I find the deal, I do all the work, I put it under contract, I go to raise the money, and I cannot raise the money. And so today we're talking about raising capital with the purpose of diminishing that fear. We want to take the fear that you have associated with that and drive it into a little corner, right? We'll take that fear, drive it into a corner, and allow you to go out and flourish. And with this, right, I do not like for this to be Jason Stubblefield's sermon. All right, you showed up here with some purpose, with some intention, and hopefully you can have those needs met. So if you're on Facebook Live and you want to go ahead and drop a comment in, and we'll try to answer all those questions. If you are on the Zoom, feel free to go ahead and put it in the chat. We'll try to get to your question. So whatever the reason that you showed up today, you can go ahead and walk away from this meeting better than how you came in. So I'm going to go ahead and share my screen briefly for those who might be new. My name is Jason Stubblefield. You should be seeing a picture of my website. This is snscapitalpartners.com. That's like Sam, Nancy, Sam, capitalpartners.com. This is our website. You find out more about me, some of the projects that we've done, some of the investors that we work with. You can find all that information here, right? So I've been doing this since 2015. So I had this meetup probably since, I don't know, 2017, 2018. It used to be live. Now it's online, but still hopefully as powerful and helpful as it was when it was in person. If you go over to the Invest tab, if you want to hear about our projects that we have coming up, we got some exciting projects right now. If you haven't heard about that, it's probably because you aren't in our community. So if you go over to the Invest tab here, click on Join Now. It's a brief form. You fill that form out, take you 2 minutes to do. That'll put you on our list. We'll have a conversation, see if some of the deals that we have are meet your criteria, right? If it's something that you're interested in, you can learn more about that by completing that form. So with that being said, let's go ahead and dig right into it. Did we get any questions? I don't see any right there. Let me check the Facebook Live. I guess not. So I'll go ahead and start this off. The way this will work is I'm going to go over some high level stuff briefly when it comes to raising capital. What I want to do is cover that briefly and then have some time to go into details about the questions, because this is a big subject, big topic. Lots of people go about this different ways, but the only way that really matters is your way, right? What can you do with this? And a lot of times you see multifamily gurus, people who are in the industry that'll tell you things to do, but it's what can you do given your current situation. So that's what I want to speak to today. The people who are on the call, really finding out what's going on in your thanks, Irish, appreciate that. What's going on in your life and how you can best do this. So let's just go ahead and hop right into it. Where do you find the investors? Okay, you want to have investors invest in your deal. Where do you find them at? The number one place to start is in this guy right here, right? Your phone, your contacts, you know people. And some of those people are investors. Now, if you have a family that's like mine, it may not be a lot of people, right? But friends, whatever, friends and family is where you start first. And I encourage you to go out and just have conversations with your friends and family about multifamily investing. So some of you may have heard me say this before, but I used to work as a software engineer. When I was a software engineer, and then I decided to invest in multifamily apartments. When I spoke with somebody and they asked, what do you do? I always said I'm a multifamily investor. Easy, just rolled off the tongue. And why was I doing that? Well, the intention was that people need to know you for being a multifamily investor, right? No one wants to cut a $50,000 check to someone's side gig, right? So you say like, yeah, I'm a barber, I cut hair, I drive Uber and Instacart on the side, and oh yeah, you know, I got this apartment investment thing going on. I'm taking $50,000. Would you like to invest with me? No, right? They want to invest with someone who they feel like is a professional. And if you're new, you may feel like, well, I don't know a lot. I can't necessarily be a professional in this space. But if you are listening to, if you're on a meeting like this, if you are listening, consuming podcasts, whatever it is, you know more about multifamily than a lot of people do, right? Once you're in the business, you feel like everybody's in the business until you talk with somebody else and you realize there's a ton of people that don't even know this is possible. So right in your phone, right in your friends and family, close network, there are people who don't know about apartment investing, and you need to brand yourself as an apartment investor who knows what they're doing and share that information with them. Okay, so that's one. The second place to find investors at is just from the network that you build, right? So we talked about in your phone, right? You have a network here. Make sure you see that there, but you have a network here, but you also have the network that you build. And here's where we start to get serious, because you inevitably will run out of friends and family, and the people who will invest with you will run out of capital to give you in deals. And so you have to create a business system of continuously bringing more people into your world to raise capital from. So how do you do that? Well, some of you, especially over on Facebook, there is this thing called social media that came out, and there's billions of people that are on social media platforms. So whenever you're raising capital, I like to think about where is your audience at? Where are the people who you want to invest in your deals? Where do they live at? What do they like? What are they interested in? Marketers usually talk about creating your avatar, right? And I was a person who was like, nah, you don't really need to do that. That's sort of a waste of time, right? Let's just go talk to people. But I changed, right? And part of that change has become just realizing that when you can speak directly to your avatar, your person, right, it makes your communication much better, but it also shows you where to find your people at. So when you think about an avatar, you think about, all right, who is my ideal investor? What are they doing? Do they have a family? Do they not have a family? Where do they live at? What are they driving? What are they interested in, right? It allows you to think about those type of things, and suddenly light bulbs go off where you start thinking about where these people could be hanging out at. Now, when it comes to social media, there are several Facebook groups, LinkedIn groups, Instagram pages, YouTube pages, where those interests are the driving factors behind the group, right? So what you could do is join those groups, become a participant in those groups, because your investors are there. Now you know where to find them. When you do this, when you start to engage with people off of social media, though, right? And this is just one way. I'm talking about social media, how to find investors. But when you are engaging with people, by all means, be a human. Okay. I cannot tell you how many times someone comes to me on LinkedIn, they come to me on Facebook, and it's like 15 paragraph message about them, their business, who they are, what they do, what they have, and do I want to buy it? Right. And it's atrocious as a marketer to think that you're gonna do that and try to do business that way. Here's how you think about it. If you met someone off the street and you engaged in a conversation with them, what would you say? Right? Would you walk up to a complete stranger and say, "Hey, I've got this great 150 unit apartment complex with 22% IRR return and cash on cash, and would you want to invest in that?" And the person's like, "Wait a minute, who are you? I don't even know your name." Right? And you're telling me all this information, right? So when you're communicating on social media, realize that there are other humans on social media, and that's who you're talking to. So don't be a weirdo, right? Don't just come out and start spilling everything. And these people, they do it in bulk and mass and just try to send out as many messages as possible. But it's better to have quality over quantity when it comes to this, especially if you're trying to build real relationships that will help you raise capital for your deals. So a brief introduction, a genuine interest in what that person is doing, a conversation that's not weird at all, and then over that, naturally allow your apartment conversation to come up. Okay, so that's just briefly talking about finding investors over the internet. Okay, but you got these platforms, LinkedIn with a ton of groups, Facebook with a ton of groups. And so what I did, I'll simply tell you, is that I engaged in those conversations. When you find that you're talking with someone who seems like they want to take the conversation further, the goal is to get that person off of that platform and into your world. So what I would do is have set up a Calendly. I think Calendly has a free option. If it's paid, it's not that much money. And you send your Calendly link. Say, hey, let's do a 15-minute call. Let's do a 30-minute call. Find out about them. Find out what they're doing, but be serious about it. Okay. It is very casual, but you also need to be very serious about what you're doing, because you're building your business, right? You think about it like, oh, I'm just having this conversation with some person I don't know. But in all actuality, you are building your business one person at a time. All right. So that's social media, that's stepping out of your own network. Other ways, finding places where your ideal avatar will exist as well. So meaning there's meetups. Meetup.com is a great place to go to be able to find meetings where there could be potential investors at. If you're in the golf, you can go to golf clubs, right? You can go to any meeting, any event, right? If you think about that avatar, like I spoke about earlier, and think about where they are, what are they doing, and then you go to those places where those people may be, you may do it. Now, I talked about social media first because I mentioned I have a software background. So why would I go to a smaller venue when you can go to a bigger venue and you can do it a lot more efficiently, right? The reason I created this platform in the very beginning is because I got burnt out from attending so many meetups before that I was going there to talk about multifamily. I'm hanging out at a single family and no one is talking about multifamily the whole time. So it's an hour from driving there. It's the meeting, and maybe I talk to 2 or 3 people who are actually interested. It can be done. It's a slower grind, but I will say this: the face-to-face connections are so much stronger than those that are just happen online alone, right? So that's why I encourage you to do Zoom meetings with your potential investors to try to get more FaceTime with them, right? So you can do the face-to-face. I encourage it. I still do it every time I'm out. I'm always talking about what I do, right? And it's easy. It's a very natural conversation. It isn't salesy at all, but that is just something that you'll have to build one investor at a time. And look, there isn't any shortcut to this, right? You hear these advertisers that say, hey, what's the capital raising secret? I'm going to give it to you right now. what's the investor secret? I'm going to give that to you right now. And the secret is that there is no secret. It is consistent, deliberate action over a period of time to build up your own investor network. That's the only way I've seen it done effectively. Everyone who I know that raised capital does it that way. And so getting into that, it has to be a system though, right? You don't want to just take this if you're truly building a business and say, I just want to do it willy-nilly, right? It's something that I'm just coming around doing every time I think about it. It needs to be consistent. So let's talk about thought leadership platforms. This here is my thought leadership platform, right? It's one of them, right? And you want to create your own when it comes to raising capital, because there isn't anybody who's going to save you, as I think I just mentioned that before. But when you're doing that, when you create a thought leadership platform, it brands you as a person who's in the industry. And this is how you start to garner the trust of investors. They need to see you over and over again talking about whatever it is that you're talking about, right? Multifamily, where you're talking about raising capital, finding deals, underwriting, your market, just sharing with people is how you can build your thought leadership platform. There isn't a real one size fit all method, right? The goal is you find one platform that you can be consistent with, right? And one thing that you can do that you can be consistent with. When I first started off, my method was a monthly meetup, once a month, right? And if you could commit to doing something once a month, that's 12 times a year, it's not too burdensome on your life. But every time you think about doing something in this, I think in business in general, right? You really need to think about, I want to do this for a year. Jacqueline, I love you, but I want to mute you, honey. All right, we got it. So thanks, Iris. I think you may have beat me to it. But yeah, the goal is that you think about doing something for a year, because it's easy to get fired up if you're an ambitious person like I am. You'll say, all right, I'm about to go take over the world, right? I'm going to raise $1 million in 2 months, right? Which is doable, but you'll come out the gate and you're making all these posts on social media, you're going lives, you're shooting videos, you get a production team, you do all this other stuff, and then you burn out after 2 months, because in the beginning, you're going to talk and there's not going to be anybody listening, or very little people listening, right? You don't have an audience yet. So the goal is to stay consistent enough with doing it long enough that it grows, and it grows in authenticity. So you may start whatever it is you choose to start. You do it. You have to be willing to show up and talk to one person if it's only one person there. You have to be willing to show up and talk to even nobody if there's nobody there. You have to be willing to make the Facebook post, the YouTube post, and not get any views, any likes, any subscriptions from it, and do that for a while, right? But consistency is what will build you as your brand. All right. Coca-Cola, they advertise on TV. You see them all the time with their Coca-Cola advertisements. Now, they know that if they put that on a television screen, that you're sitting in your house and you're not at the store. Very few people get up from the middle of watching something, go out and buy a Coca-Cola just because they saw a Coca-Cola commercial. But what they do is they see it, it gets embedded in our brain. This is what marketers are doing. They're embedding it in our brain. So the next time they are at a store and you think, hey, I want to buy something, you want to go get a Coca-Cola product. I don't drink pop, but for those that do, go ahead and enjoy yourself. But you want to do the same thing, right? Even if you're sending out your messages, if you're sending out emails, or you're making your Facebook post, even if nobody sees it or if they don't comment on it, right? You're still embedding the impression of you as a multifamily investor, right? So they see your face. Some of you may get emails. I got an email today that says, stop emailing me. That's fine. I don't begrudge that at all, right? It's it's part of the business, but you having somebody see your name associated with multifamily, and you're doing that over and over again. So that when that person does finally decide to give you a listen, or you finally do get them on the phone, they already know what you're about, and you've done that consistently. All right. So that was a thought leadership example. It's always a way to promote what it is that you're doing, give value to other people, share what it is that you're learning. You can literally be brand new at this, learn something, turn around, shoot a 2-minute video about it and put it out online, because whatever you just learned is going to be helpful to somebody else. All right, does that make sense? Check in. All right, so nothing there. So building your network, right? We talked about in your phone, building networks with people that you don't know. We talked about whether you want to go out and do that in person, or whether you want to do it online, being a human being, creating your thought leadership. The next thing, and this one has personally been very valuable to me, is leveraging other people's networks, right? So you are building your own network, and it's going to take you time to do that. But in the beginning, you may say, I don't want to necessarily wait 6 months for me to build up my own investor database. You may find the deal very early on, and that's where other people's networks or partnerships come into play. So if I know somebody who is in the multifamily space as well, if I know somebody else is already sharing content, if I know somebody else is already developing their own investor base and they're looking for deals, and I now have a deal, why would you not share that with someone else, right? So what you can do is build you a team of other people who also have networks that may like your deal, right? So you have a relationship with that person first. So it starts off with this person who has a network. You're building a relationship with them that's genuine, that's honest. You know that they're in the apartment investing space, right? And then you just say, hey, if I brought a deal to you, or when you see one of these deals, is there something you may look to partner with? Of course, they're going to want a piece of the deal, and you should be happy to give it to them. But just think about the power of doing that, right? If you can raise, say, 0, right, but you just find one person who can raise $500,000, let's call it, right? You have a network of 0, but you found one person that can raise $500,000. You've suddenly expanded your ability to raise capital to $500,000. Okay, and that's just through one individual. So imagine building that team of 5, of 10, of 20 or more people that can all bring $500,000 to your deal or more, right? This is huge when it comes to leveraging up and being able to scale and go bigger faster, right? So adding these things together, building your own network, leveraging other people's network, and being consistent is what will allow you to build your database to do your deals. And I encourage people not to go out and do deals that are so far-fetched beyond what you have that it's almost unbelievable to you. So I know it, in the space, I hear it all the time. Hey, you need to go, big, right? If you can't get over 150 units, then you don't have on-site management. And so you need to stick to these really, really big deals. And yes, those people are right. And yes, there is some validity to it. But when you're starting off raising capital and you're trying to raise $5 million on your first deal, or $8 million on your first deal, it's going to be very challenging for you. It's going to be challenging for you to even say, this is possible for me. It's such a far reach, and you're starting from 0. So my way of doing it is to start with a property that's a lot more reasonable, right? And yes, you can still find managers that will manage your 15 unit, 20 unit, 50 unit, whatever it is, right? But it's more manageable, along with your raise is more manageable. And then you've gotten your foot in the door, right? You've gotten some success, you've made some progress. You've been able to sort of build your footing with a smaller investor base, right? and these things sort of grows. So everything with this, the reason I call this the multifamily code, right, is that you are, it's like software, you're building things piece by piece. It's a little component, it's a little puzzle to put together. And so everything is a system, right? Finding deals is a system, right? Underwriting deals is a system. Finding investors is a system. And then operating within that system is how you grow and build your investor database, right? So it's fairly simple. You're going to start with the internet, which has billions of people. You're going to go out with your voice, talking your message, and there's going to be a certain amount of people who raise their hand to say, hey, I'm interested in what you have to say. Like, I'll be very transparent with you. At the beginning of all these meetings, I always say, here's how you invest. That's not an accident, right? I'm doing it very intentionally because some of you are here because, hey, you want to learn more about multifamily. Some people may be interested in investing passively. So I always share that and make that appeal at the very beginning because it's part of what I'm doing. So I'm not trying to just share things that are theoretical to me, but it is sort of a process. If you implement this process, you'll definitely see your investor database grow. All right, that's where I want to end it at for right now. I can go into more in-depth detail. If you're on the line right now and you have questions about anything that I've said, if anything was not clear, you want to go into depth, feel free to unmute yourself. If you have any questions, any comments about this, it is huge. It's not the easiest thing in the world, but it's definitely worth it because this is something that is a skill set that can really carry you through the rest of your life. Like, every business needs money, right? And if you understand how to build leverage, form relationships with people, and raise capital, that's something that will help you not only grow in this business, but just have skill set for further in future and into the future as you continue to grow your business. That's about all I got. Do we have any questions? Any comments? I'm looking. Is there anyone
Jason, this is
listening? Hey, yeah, what's happening, Tom?
Yeah, I had a question. So say you have a meetup, do you have to know what property you want to offer to the group, or just looking for people who might be interested at that point?
No. So the capital raising process will start way before you have a deal, right? I mean, ideally, right? It's just going to be something that you do. Like, every Wednesday, you're hosting a meetup, whether you have a deal or not.
Okay.
And I won't get into it, but depending on the type of structure, you can't share deals with just people who you just met, right? So you have 506B or 506C. So it's nothing that you're going to share, but the audience that you are forming is to grow your relationships, to grow your network with people as you bring them into your fold.
Okay.
Does that make sense?
Yep.
No problem. Let's see. Anybody else? They're here. Let's see. Anyone else with comments about it? If not, this will be a quick meeting. I must have knocked it out of the park there. Like John Rubino, I know he's on. He's raised tons of capital. What do we have? Tiffany Spans here. I know that she's raised a lot of capital. Ash says, what about syndication? Syndication is sort of like the next step once you have your capital base, right? So the reason that you're building this, and yeah, I probably should have covered that a little bit, but you're building this network so that you can put them into a syndication deal. Syndication is just really the legal structure by which you do all this, because you don't want to have a pool of 20, 50, however many people, and just go have them invest in something that's illegal, right? So syndication is how you protect yourself legally with the investors that you have. But what we focus on here is not necessarily the syndication part, but the part of raising capital that you will then place into a syndication. If that makes sense. All right. Any other questions, comments? Yep, no problem, Ash.
Hey, Jace, this is John Rubino. Just adding a couple of things. You know, most of the deals we're seeing right now are obviously anticipating rate increases. So probably starting anywhere from 5 to 7% on those construction loans for renovation projects or large scale development deals, new construction projects. We're also seeing, I'd say, 15 to 20% on contingency line items for construction and total cost. Again, just baking in those contingencies. A lot of folks that are halfway through projects right now also seeing rates go up from what they initially performed out. So that's causing increases in interest reserves and more folks needing additional capital. So just, you know, some things to think about as folks start looking at deals, whether to invest in. I know you're probably looking at the same things on your project, so just thought I'd share that with the group.
No, I'm very, very thankful for you for bringing that up, right? And just what John's talking about, market conditions right now are making deals more challenging, right? To make numbers pencil, right? With rising construction costs, rising interest rates. And with doing that, as an operator, you have to be a little bit conservative. And I'll tell you, because we, you know, we're going through this process right now, but investors really want you to be a professional, right? To not run from the challenges, but to embrace them, right? So we're having things right now like bridge debt. You need to be purchasing a rate cap, right? Investors want to see that you're doing that and that you've addressed that concern. Also, like John was talking about, your reserves, rainy day fund, all those things should be accounted for. So part of the underwriting is making sure that you account for that. But when you're talking to investors, you need to communicate that as well. So Rasheem's like, what type of returns are investors looking for in this space? Great question. What we've seen is it's come down, right? When you are putting together a deal, it really boils down to what your investor base will choose to invest in, right? And so getting investors at 8% cash on cash is probably what we could do maybe 4 or 5 years ago. And that's now come to 7, right? And I've seen deals at 6, right? So usually if you're somewhere in between that 6 to 8% cash on cash, that will suffice for being able to attract investors to it. Beginning, you know, we used to see IRRs at 18 and 19+%. Now you've seen deals with 13 and 14 IRRs. And so this is what I'll say, since I think that a lot of people attending this meetup are fairly new or looking to do their first deal. Your first deal should not be a 12% IRR and a 6% cash on cash. I mean, it can be, but ideally you want to do the best deal that you can in that 6 to 8% range, right? But you want to have as high of an IRR as you could in the beginning, and then use that to grow an investor database. So what I'm saying, if someone has been doing this for 15 years and they've got an enormous investor database, they have more leniency in their deals to offer lower returns than someone who might be brand new, right? And so just make sure that you account for that. Okay, thanks for that, Irish, appreciate it. Internal rate of return, that's a metric, Rashad, that you use to compare investments on. So briefly, I'll try to explain it, and I have to explain it very, very in simple terms, right? So if you invest call it $100,000 and I give you $10,000 back, that's a 10% return on your investment, right? And let's just say that you have 2 investments that require $100,000, and one of them is going to give you $10,000 in a return, and the other one's going to give you $10,000 in a return. Now, one of them is going to give you $10,000 in a year, And the other one's going to give you $10,000 return too, but they're not going to do it until 5 years from now. Which one of those deals do you want? Right? Obviously, the one that gives you the same return faster is the better deal. And so IRR is something that you can look at if you want to know the details, but it's basically a measure of your return, and it takes into the present value of money, and the time effectiveness of it, right? So if you want to compare apples to apples, the IRR is the best way to do that. Any other questions? All right. If nothing else, I appreciate it. I hope that you all found this. Yep. Takes in the time value of money. Thanks for that, Christian. But if nothing else, I appreciate y'all for showing up today. Hopefully you found that valuable. Again, I'll be here next week. We go live every week. Make sure you come with your questions intact. Want to make this all about the group here, right? Not just a Jason Stubblefield talk fest, right? But hopefully you're showing up, and hopefully I'm providing value to you. Thank you, John, for those comments. Thank everyone else who is on the line today. I will see you all next week. Make it a great day on purpose, because you deserve it. Later.